welcome to the deep dive. Today we are digging into some, well, heavy lifting, you could say, literally with construction equipment and figuratively with these financial reports.
That's right.
We're doing a deep dive into the latest earnings presentation from Action Construction Equipment Limited. You probably know them as ACE.
Exactly. And this presentation, it gives us a pretty good look at their performance for Q4 and also the full financial year that just ended back in March 2025.
And our source is, straight from the horse's mouth, so to speak. It's the presentation ACE actually filed with the stock exchanges. It's really packed with details on their financials, their operations, and maybe most importantly, the bigger trends shaping the sectors they work in.
Yeah, so our mission today is basically to cut through all that data, pull up the really important nuggets, and help you understand what's actually driving this company. I mean, they're deeply embedded in India's growth story.
So try and picture the scene with us. You've got these massive construction sites, railways expanding, factories humming, warehouses just buzzing with activity. That's the kind of engine of growth ACE helps power.
Okay, so let's start with, who ACE actually is. They started way back in 1995.
Right.
So that gives them over 30 years of experience now. And the company's led by a technocrat founder, apparently with something like 50-plus years in the industry. Quite impressive.
Wow, yeah. And they've clearly grown into India's most diversified manufacturer of construction equipment, or CE. They're playing across all these major sectors: infrastructure, construction, manufacturing, logistics, and even agriculture. It's a really, really broad footprint.
It is, definitely. And they hold some pretty dominant positions in certain areas. The presentation highlights they are the world's largest maker of pick-and-carry cranes.
Those versatile ones you see everywhere.
Exactly. They hold over 63% of that mobile crane market in India. Plus, they've got a leading market share, around 60% domestically in tower cranes, too.
World's largest and domestic leader in key crane types. I
Yeah.
mean, that tells you a lot about their scale and focus. But their product range isn't just cranes, is it? It's quite a bit broader.
Oh, yeah. The source details a really wide portfolio. You can sort of think of it in categories.
Yeah.
You've got lifting equipment, like all sorts of cranes and telehandlers. Those are kind of like forklifts, but with a boom.
Right, for reaching higher.
Exactly. Then earth-moving and road-building gear, like backhoe loaders, vibratory rollers, and then more specialized stuff for logistics and agriculture, forklifts, warehousing equipment, tractors, even harvesters.
So they're basically equipping sites from the ground up, moving materials around, and like you said, even helping out on the farm. How does that diversity break down in terms of their actual business exposure, sector-wise?
The presentation gives us that split. So manufacturing and logistics, that's the biggest piece, making up about 45% of their exposure.
Okay.
Infrastructure is also really significant. That's around 35%. Then you've got real estate at about 13%, and agriculture is roughly 7%.
And they back all this up with a pretty solid presence across India, right?
They do, yeah, an extensive sales and service network. It mentions over 125 locations in India, supported by 13 regional offices. Plus, they have an international footprint, too, exporting to over 37 countries. And the presentation really emphasizes their identity as 100% Swadeshi, domestically focused.
Okay, right. Let's get into the numbers then. How did FY25, the full year ending back in March, actually look for ACE?
Well, the headline is pretty clear. FY25 was their best year ever. Both revenue and profits hit record highs.
Wow, highest ever. Okay, let's break down those consolidated financial total income. It hit over 34,200 million Indian rupees. That's roughly 410 million US dollars, just for context. And that's nearly a 15% jump year over year compared to FY24. And the trend they show over the last 4 years, it's just a consistent climb upwards.
Exactly. And their operational profit, measured by EBITDA, earnings before interest, taxes, depreciation, and amortization that grew even faster, it was up over 26% year over year, reaching over 6,000 million rupees. And the trend there is also, well, very strong looking back.
And crucially, I wasn't just selling more. They actually got more profitable doing it. The EBITDA margin expanded by, 162 basis points.
Right.
That's 1.62 percentage points. It hit 17.68% for the full year. And that margin has been steadily improving over the past 4 years, too. That suggests, they're not just growing, but maybe managing costs better or selling a richer mix of products.
Exactly right. And that strong operational performance, it definitely flowed down to the bottom line. Profit after tax, or PAT, grew by almost 25% year over year to just over 4,000 million rupees.
Okay.
And the PDT margin also improved by nearly a full percentage point, reaching close to 12%. The strong growth in profit per share obviously meant diluted EPS grew by pretty much the same rate, about 25% to INR 34.37.
The presentation also seemed to point to improvements in the company's sort of underlying financial health beyond just the P&L.
Yes, definitely. They highlighted a significant improvement in working capital days, which is basically how efficiently they're turning things like inventory and receivables into cash.
Right. Faster cash conversion.
Exactly. And that number dropped significantly from 38 days back in FY23 to just 18 days in FY25. That's quite a change.
Yeah, that's huge.
Plus, they showed a strengthening balance sheet with negative net debt to equity, which basically means they have more cash than debt. And return on capital employed, while it dipped slightly compared to FY24, it remained really high, over 40%. These are all, pretty good indicators of financial robustness.
Okay, so FY25, clearly a record year. How about the most recent quarter then, Q4 FY25? Did that momentum keep going?
It did, yeah. The presentation shows that sustained growth trajectory continued right through the fourth quarter.
So looking at Q4 specifically, compared to the same quarter last year, total income was up over 13% year over year, hitting just under 9,700 million rupees. And quarter over quarter compared to Q3, it was up about 7%.
And EBITDA in Q4 grew by over 14% YoY, reaching 1,721 million rupees.
And the margins in Q4, how do they hold up?
Let's see. EBITDA margin was 17.75%. So a slight improvement year over year, though it was down just a tiny bit compared to Q3.
Okay.
And the PPAT margin was 12.23%, which is a good expansion compared to last year's Q4, but again, just a small dip sequentially from Q3.
And the reason they gave for these sort of sustained healthy margins?
They put it down to a few things. Getting better prices for their equipment, that favorable product mix we talked about, likely selling more higher margin items, and just efficient cost controls across the board.
Right. So the financial picture looks pretty strong. What about the actual, movement of equipment? How did the sales volumes look?
Okay, so for the full year, FY25, the volumes for their core segments, cranes, material handling, and construction equipment, they grew strongly. Up nearly 15% year over year. They sold over 13,300 units in that category.
Wow.
However, agri-equipment volumes actually saw a slight decrease for the full year, so a bit of a mixed bag there on volumes overall.
Interesting contrast between those segments for the full year. And in the latest quarter, Q4, how did that look?
Right, Q4 actually saw volume growth in both segments compared to the previous year's Q4. Even agri-equipment volumes saw a small uptick, and the crane and related categories showed really strong Q4 growth, selling over 4,000 units just in that quarter.
Okay, now beyond just the overall volume trends, there was a specific opportunity highlighted in the presentation that felt, well, particularly significant.
Absolutely. This is the whole evolving landscape in the defense sector in India. ACE received their single largest order ever.
Biggest ever, okay.
Yeah, a massive contract from the Ministry of Defense for 11,121 rough terrain forklifts. It's a type of telehandler, basically, designed for really challenging environments. And this order is worth 420 crore Indian rupees.
That is a substantial order. What's the sort of bigger picture significance here beyond just the number?
Well, it's more than just the size. ACE seems to see this as a really key step in helping modernize India's defense infrastructure, specifically using domestically produced equipment.
Ah, the Make in India angle.
Exactly. The presentation points out that ACE won this by, successfully proving the capability of their equipment through some pretty rigorous testing and also demonstrating strong R&D capabilities. It aligns perfectly with the government's big push for Make in India and Atmanirbhar Bharat, the Self-Reliant India initiative. It's kind of a validation of their indigenous tech.
So they're directly benefiting from and also contributing to a major national priority.
That actually leads us nicely into the broader market forces. Let's zoom out a bit and look at the sector-specific growth drivers the presentation mentioned, the things creating opportunities for a company like ACE.
Right, and this is where you really see the massive tailwinds they talk about. The presentation heavily emphasizes the significant government capital spending.
And the numbers cited are just huge, aren't they? Total capital spending budgeted at 11.2 trillion rupees for FY26.
A trillion, yeah.
That's over 130 billion US dollars, and it's a 10% increase from the previous year's revised estimate.
And a huge chunk of that spending is directed right at the sectors where ACE operates. Infrastructure is clearly a massive focus. You've got these large budgets for roads, over 2.7 trillion rupees, and railways, over 2.5 trillion rupees.
For roads specifically, the target sounds incredibly ambitious. building 10,000 kilometers of national highways just in FY26.
The presentation even notes expectations of something like $200 billion worth of road projects just in the next 2 years. That's a lot of construction.
It really is. And railways also maintain a very high allocation. There are plans for new trains, Vande Bharat, Amrit Bharat, these new economic railway corridors, and really pushing forward with the National Rail Plan. Lots of activity there.
Urban infrastructure is also getting attention,
Right.
with a 1 lakh crore fund mentioned. Let's see, 1 lakh crore is 100 billion rupees, so roughly $12 billion US.
Yeah. And don't forget ports. They're seeing significant investment under the Sagarmala program. Lots of projects identified, billions of dollars planned for investment out to 2035, with a pretty substantial amount targeted for completion in FY26 alone.
Okay, infrastructure is huge. The manufacturing is another critical sector for ACE, providing all that material handling gear.
Right. The presentation highlights this goal for India's manufacturing sector to reach potentially $1 trillion by 2025-26.
Oh.
And government schemes like the PLI, the Production Linked Incentive Program, which has a large outlay, are specifically designed to boost domestic manufacturing. This is all supported by, the revival of industrial capital expenditure, plus initiatives like Vocal for Local and this whole China Plus One strategy idea.
Right, where companies look to diversify.
Exactly. Diversify supply chains away from China, potentially making India a bigger manufacturing hub. And all that requires building factories, equipping them. That means demand for ACE's equipment.
And real estate, too, obviously needing cranes and other construction gear, that's also expected to expand significantly.
Yeah, the projection is for substantial growth long-term out to 2047. And government schemes like PMAY, the Pradhan Mantri Awas Yojana for housing, got a large allocation for FY26. Plus, there are funds like Swami H 2.0 aimed at finishing stalled housing projects, all providing crucial support.
Logistics and warehousing, too, absolutely key for moving all these goods around, and ACE obviously provides equipment for that.
Definitely. The government's pushing for more multimodal cargo terminals. And the Indian logistics and warehousing markets themselves are already large and projected for really strong growth. Billions of dollars in expected investments over just the next few years.
Needs forklifts.
Absolutely.
Yeah.
Needs forklifts, needs warehousing equipment, and it's all supported by policies promoting logistics parks and these free trade warehousing zones.
And finally, agriculture, where ACE has its tractors and harvesters.
Right. The Ministry of Agriculture received a pretty significant budget allocation as well. And the tractor market, plus the overall agricultural machinery market, they're projected for steady, decent growth, maybe around 6-7% CAGR.
So it's just abundantly clear the presentation paints this picture of massive potential, really fueled by government investment and these big national initiatives across pretty much every sector where ACE is active.
That's definitely the key takeaway you get from that sectoral breakdown. Really strong macro tailwinds creating demand for the kind of equipment ACE makes.
Okay, let's just take a quick look then at how the market itself views ACE. The presentation gave some capital market data. This was as of March 31st, 2025.
Right. At that point, their share price was around 1,257 Indian rupees. That gave them a market cap of roughly 1,049,765 million rupees, which is about, $1.8 billion US?
Yeah, around there. And the shareholding pattern.
It showed the promoters held a pretty significant majority, around 65%. Then you have foreign institutional investors, FIIs, those big international funds holding about 12%. Domestic institutional investors, DIIs, think Indian mutual funds held 2%, and the public held the remaining 21%.
Okay.
Oh, and the presentation also indicated that ACE's stock had actually performed stronger than the broader Sensex index over the past year leading up to that date.
Right. So finally, what about the company's own anticipated outlook for the current financial year, FY26? What are they saying?
Well, interestingly, the presentation is somewhat cautious about the start of the current fiscal year.
Oh, why the caution, given all those huge tailwinds in government spending we just discussed?
Yeah, that's a good question. They specifically flag several potential headwinds, things like ongoing geopolitical issues, the global uncertainty, potential tariff-related conflicts that could impact trade.
No.
Then, domestically, the effect of the new CEV5 or BS5 emission norms for construction equipment. That's likely to increase costs for manufacturers and buyers.
Regulatory cost pressures.
Exactly. And then just the usual seasonal impact of the monsoon season in India, which always tends to slow down construction activity for a few months.
So despite that huge long-term opportunity, They're sort of acknowledging these near-term challenges and cost pressures.
Precisely. And because of these factors, they state that at this juncture, they're expecting revenue growth for the full FY26 to be somewhere in the range of 14-15%.
Okay, 14 to 15%. Still decent growth, but maybe tempered by those near-term factors.
Seems to be the message, yeah.
All right, well, that was a really thorough deep dive into the ACE earnings presentation. We've covered quite a bit their history, their pretty impressive position. As the world's largest maker of pick and carry cranes, we walked through their record financial performance in FY25, explored that really significant defense order, and mapped out those massive government spending plans and sectoral growth drivers that are creating opportunities for them across infrastructure, manufacturing, logistics, and more.
So you've just gotten a detailed look at a company that's playing a really central role in India's physical growth story. I mean, they're helping build the roads, the railways, the factories, the supply chains that underpin the whole economy, and even, as we saw, contributing to defense modernization now.
Yeah, the presentation clearly outlines this immense runway for growth, fueled by national priorities and huge investment. Yet at the same time, it also raises flags about navigating this short-term turbulence from global factors, from domestic regulatory changes that add cost.
Which leaves us with, I think, a pretty fascinating question for you to consider. How does a company like ACE actually balance capturing those enormous long-term growth prospects, which seem incredibly well aligned with India's overall direction, while effectively managing these immediate challenges and cost impacts they've identified? Things like the new emission norms, global uncertainties, that's the kind of strategic tightrope they'll need to walk going forward.